I'm running this recording.
I'm gonna mute myself.
I took an L today, so we can go over that maybe. But I just want you guys to kind of understand why price delivered the way it did from my lens, how I view price. Um, so let's go replay mode. Here is today. Bang. um, so that's a nasty daily candle. Wow. This was everybody's draw, right? The Trump data high, whatever, Trump speech high. This is going to be your low of week, most likely, unless something crazy comes out. But we cleared out all the relative failure swings. We're delivering outside or from a daily fair value gap. We close above this candle's opening price after the external range pool liquidity pools and failure swings get manipulated, right? And you can see how this candle closes. It manipulates the external range and closes back above what? The opening price. And most importantly, not below these lows. So now we have that framework. Wednesday, if you're putting in a low of week, so your midweek reversal, you can expect Thursday continuation. That's just a simple ICT daily profile that he's teached, or weekly profile that he's teached or taught. I'm illiterate. But going into the day, what do we have? 4 hour bissies. What was I preaching to you guys the other day on live? No deep retracements. When you're expecting continuation and expansion, you do not want deep retracements. This is that 4 hour order block put in from yesterday. We're expecting ideally this upper 4 hour fair value gap, but it could, come down into here relatively shallowly and then go higher. So ideally you want to be trading NASDAQ because it's just the strongest pair, but actually ES offered the best setup today, which I'll show you guys. So we're delivering from what? Outside of this key level, what do we have? We have 10 a.m. news and we have 9:30 as our volatility driver. Something that you guys will continue to see over and over and over, which I share with you guys on the live stream. Your volatility drivers are going to confirm your bias each and every day. Pay attention to what happens every single day at 8:30. Only pay attention to 8:30 if there's high impact news. If there's no high impact news, 8:30 is completely useless. Do not pay attention to it. 9:30 is the opening bell of the stock market. That is a volatility driver. Every day you'll see something most likely significant at 9:30. If nothing happens significantly at 9:30 and there's 10 a.m. news, you need to be waiting for 10 a.m. news. If there's no 10 a.m. news and or say there's a no news Tuesday, which there is a lot of the times, and 9:30 does nothing, you can relatively expect price to be a little slower that day. But what do we go over once again? I'm going to beat the horse till it's dead. What do we have? Failure swings at the lows. We do not want to be trading away from failure swings at the lows. Why is this level important? Yes, it's a failure swing, but what is it? London low. We know timed session highs and lows are important. Failure swing paired with what? 4 hour fair value gap. What happens? Here's 8 o'clock. We go to the 30 minutes. You can see, I believe, was there 8:30 news? No, no 8:30 news today. So 8:30 is completely irrelevant. We're not looking at that. Price does what? What happens at 9:30? Here's the 9:30 candle. Open high, goes lower. Where are we delivering from? This short-term order block. We're not expecting this to be high. We're not expecting this 8 a.m. high to be protected. Why? We have a failure swing up here. We're close to draw. We've now cleared out our relative equal lows down here, our failure swings. So we're delivering out of a key level. And what do we have down here? We have SMT. I believe there's SMT with one of these pairs. I could be lying to you straight to your face. Okay, yeah, so this is what I was looking at. See how ES is reaching into its lower 4 hour fair value gap? This is what I mean. No deep retracements. This is completely fine. When you want no deep retracements, you want price to stay in the upper portion of the fair value gap. And if we draw, when you have a large fair value gap like this, you want to draw out the quadrants. So you can see price isn't even using the upper quadrant, which is again another bullish sign. So same thing on ES. Oh, I'm retarded. That didn't even happen. God, I'm so stupid. But same thing applies. All relevant levels cleared out. Upper 4 hour fair value gap. I don't think there was SMT down here, but you don't need SMT. We're waiting for 10 a.m. now since 9:30 really didn't support our bullish bias, right? So that's what I mean to you guys. We're expecting higher prices because we have our dull. All you need is a 5 or 15 minute change in the state of delivery. That is my model. All relative lows are cleared out. What does 9:30 do? Absolutely nothing. What do we do next? We wait for 10 a.m. Okay, well we have all of our levels cleared out. Now what do? We just wait for price to create your change in the state of delivery. And this is where the SMT happened on the lower time frame. So in this case, I was using the 3 minute time frame. The 3 and the 5 are pretty much the same thing. You can see in this case, if you waited for the 5, your RR was skewed and you'd be left off sides. But here is that 3 minute change in the state of delivery. You would long here. Your stop loss could be at the candle body or at the swing low. Why can your stop loss be at the candle body? When you're in an expansion phase, when you're trading continuation, you're not expecting what? Deep retracements. So all of this, ideally the opening price offers a good reaction. And you also have this order block in your way as well. So now you have a few PD arrays in front of your stop loss. So this is a logical level. And you have your clean equal highs up here, which is an easy target, but the RR is not there. But what do you have? You can target a 2R if you would like. Or you can see what happens when NQ takes out its high up here. But the same trade forms on NASDAQ, but this is where it was weaker. So here is 10 a.m. and NASDAQ makes a new low here at 957. Same thing, 957, but look, here's YM. YM's low a day, never broke. That's why I was looking at YM to long. See, here's 933. Here's 957. This is why I was looking at YM, and I took this here. But the only thing I did wrong was I didn't wait for 10 a.m. I rushed into my trade. So if I waited for this, and today was a little sloppy. Why was that? Because it's the day before NFP Friday. So that you can also occur, you can already anticipate price to be a little sloppier. That's how it always will be. Yeah, so ideally the entry up here wouldn't be the greatest, but in hindsight, if you did, you could keep your stop loss here and then maybe potentially get a 2R, but you would never get it. Once again, this isn't the best trade because this was a very deep run, and then now your RR skewed, so you either take a different asset or you just don't take the trade. So in this case, I'm either taking ES or I'm not trading. But the key things that I wanted to go over today and show you guys over and over and over is the volatility drivers doing their job. Are they confirming your narrative? If they do the opposite of your narrative, well, then you're either wrong or it's manipulation. And how do you tell? Well, if there's news at 10 o'clock and 9:30 is doing the opposite of you want, then that is where you can expect 10 a.m. to do what you want price to do. And something key to look out for here too is notice the 10 a.m. open. It's a very shallow, small wick. What does that entail? Every candle is an open high low close or an open low high close. So if there's a very small wick, that allows price to have a large body of expansion. So that's why you can also anticipate this here to hold. And you could actually trade this if you wanted to. And you can see the RR is much better. But this was on NASDAQ. So this would be the NASDAQ trade. But you would just be allowing NASDAQ to catch up to ES. Any questions? Major wants to speak. Come on up. Yo.
Oh, you can hear me?
Yeah.
My bad. You could explain what SMT is and like what it like means.
So it just stands for smart money tool or smart money technique. It's a cracking correlation between correlated assets. So your correlated assets are NASDAQ, S&P 500, YM, and then some people use RTY, which I have no idea what even is. But these are the big three for me. I've always used, and you can go back into later price action, and you can see that YM sometimes is not correlated at all. When YM or one of the assets is not correlated at all, that will mean either two things. You can still trade Nasdaq and ES because these are the ones that you really want to be correlated,
Yeah,
but you can expect price to either be sloppier, less respective of PD rays, etc. It's going to color outside the lines more often. Um,
cause
that will definitely happen if these two are not correlated. So when that happens, you really don't want to
yeah.
trade.
Oh, so it's like an indicator that you should like step away.
But that part is not really how you use it in that can help you avoid bad conditions. How you use SMT in real time is that's how you find your protected highs and lows. So notice
Could
how
you give an example on
yeah,
the chart real quick?
yeah. So here's that 930 low. Here's
Yeah,
957 and here's YM 930 low. Here's
yeah.
957. Notice how Nasdaq makes a lower low, or we'll just use ES because they both made lower lows. But here's 930, lower low here. YM makes a higher high or a higher low, right?
Mhm.
So now, how do you trust that now this low should not be broken? Well, you just need that change in the state of delivery, and that is that candle closure above this last down close opening price. And how are you validating this? Well, here's 10 a.m. news. So here's your 10 a.m. open. And how does a bullish candle form? Open, low, high, close. Had this candle open low, high, and then you can see it closed bearishly, but that's because our weekly objective was met.
Oh, so like, could you go step by step on like how you trade during the day? Like what do you look for? Like, do you look for news first? Then you open the charts, mark some levels, like create a certain bias and stuff like that.
Well, that would be that is based off of the liquidity pools that we're trading off of, or the key levels. That's what everybody says. So it's either an order block, a fair value gap, breaker block. But normally, you want to be paying attention to highs and lows. I won't get into the entire breakdown, but we can definitely do a class like that because I don't want to be too long here tonight. But type that exactly what you just asked in, and I'll take a picture of it, and we'll run a class back for everybody.
Okay, all right.
How long y'all keep prominent higher time frame value gaps in the chart? Like if it gets swept through twice, is it still a point of interest? See, I don't look at stuff like that over and over and over, and you don't really want to because you should be focusing on really like fair value gaps that continue to get ran through over and over. They mean nothing. Like they're obviously not doing their job. So why is it an important level? It's not. So it's really that's what's helped my trading the most, and that's why I'm trying to save you guys a lot of time. Is highs and lows, candle closures, news events, so volatility drivers validating your bias, and your key levels being met. Which traders are the best to follow, or should I just follow one like TT? The dude who I'm learning a lot from, and yet they all have a paid group. I have never paid for anybody's group, but you can if you want. But I learned from AM Trades and Garrett on Twitter as well. They run the lens, the market lens. Is there a difference between a fair value gap and an imbalance? No. Same thing. People just call it different stuff. I call them bissies and sibbies sometimes. Yeah, they're all the same thing. Did we miss a question? Yeah, I apologize, Major, for not going through that whole thing, but like I said, we'll get a class going for everybody. Reason I asked is ran through / bodied are invalidated, but if a fair value gap only wicked, then it is still valid the second time around. Yeah, I mean, if it's not broken through, then yeah, I mean, it's fine. They have more weight than not, but you'll see once you learn more that it's not the fair value gaps that's moving price. It's the liquidity levels. It's always going to be the liquidity levels, and then it's how the candle closes or reacts after that that's going to tell you if the continuation is going to happen, if we're most likely going to form a consolidation, or we're going to frame a reversal. Reason I ask is I longed a breaker on a fair value gap that was previously swept twice, worked smooth once, didn't know if I should count on it. Well, Dane, there's probably something there that you might have missed. I longed a breaker on a fair value gap that was previously swept twice. Yeah, I mean, the fair value gap getting ran through over and over is not wouldn't be important. Can you go over manipulation versus failure swings? Well, manipulation is not the same thing as failure swings. SMT without CSD is of no use. I wouldn't say no use, but that's how I trade them. I don't like inversion fair value gaps. People can use whatever entry model you want. I don't trust, because you'll see a 1 minute fair value gap, 3 minute fair value gap. They'll work, and then sometimes they don't work, and you'll see sometimes there's a CSD and sometimes there's not a CSD. So I just wait for the order block. And the order block's the safest way to place your stop loss. So once I get stopped out, I most likely know I'm wrong. Unless it's not the true invalidation point, because I do trade continuations. I don't trade the absolute reversal, because I don't need to be in the absolute top or bottom. Can you go over manipulation versus failure swings? I don't know what that really means, because they're not the same thing. I can show you what failure swings are. These are all failure swings right here. People like to call it low resistance liquidity, but people also say that all lows that are relatively equal are low resistance liquidity, and that's not true. Because you can see here, this is all people love to call this low resistance liquidity, but how come we didn't come and take some of this a little deeper and then go higher? Well, what are your relevant failure swings? All down here, right? You can see after we form this little consolidation, we form one here, 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 here. What do we want? No deep retracements. We'll just use this. What do we have? Price comes back to a discount into what? The final failure swing, the most relevant level. In a discount, price goes higher. Same thing here. Failure swings. Chop, chop, chop. Same thing. What do we want? No deep retracements. Swing high to swing low. Relevant key level. All the lowest failure swing into a discount goes higher. What do we have today? Here's our final draw on liquidity, the most obvious draw on liquidity. All of our failure swings here. 930 manipulates the failure swings. And then we displace higher. Anybody have anything else? And manipulation is just price taking a higher low and then closing back into the range. Failure swing equals consolidation. Pretty much. Yeah. All relevant swing lows that are in a proximity to each other. So this is a good example too. Here. You look at the daily where everybody, or we can look at the weekly because it's even clearer. So before this candle prints, you're not framing a reversal from this weekly low. Why? Well, what do you have? A low, which was taken here, but not a deeper trace, or actually it wasn't. So, yep, you have these two failure swings. Now you have this one. This one. See how much further this is away than these two? This is not a failure swing. This is a liquidity pool, yes. Could price still come down here? Of course. But this is where, once these weekly objectives get met, now this is where you could be framing a reversal. So, still, this weekly candle prints, never took out the failure swings. You do not want to be trading away from failure swings. And they finally get hit, and then what happens? Same thing, right? We fail to close below, but on the lower time frame, your models are forming, etc. Any other questions before we wrap it up? Bev mentioned he expects 50 retracement on this last pump. I've heard TT mention that 50% before too. Is this an ICT thing or just a general rule of thumb on technicals for guys? So yeah, ICT, I've never really learned a lot other than from ICT, so I will most likely, I mean, it's not an ICT. It got popularized to me from ICT, but the 50% on the fib has always been a very important level. The 50% and this 61.2, people call it the golden zone or whatever. So those are relevant levels because it just shows a premium and discount of that range. You're welcome, Dane. I did record everything. Last call. Bev, you got anything to say?
No, I mean, dude, you covered it well. Yeah, that screenshot. I don't know if you guys have questions on that screenshot. I'll answer them right. But yeah, you killed it, dude. Good stuff.
Thanks. Appreciate it. Swami. I can never tell if he's being serious or not.
For real.
So funny. Alright, we'll see what Keon says and then
Goal 20K.
goal 20K. Let's go. Alright, guys.
Well, on yeah.
We're wrapping it up. Good night, guys. I recorded everything. See you guys next class. I got to screenshot that thing from Major real quick. How do you create a bias? Boom. I got you, Major. Don't worry, bro. We'll get that in.